Welcome to the Money Answer Show with host Jordan Goodman. Whether you are starting out, deep into your retirement, or somewhere in between, the Money Answer Show has the know-how to help you. Now here's your host, Jordan Goodman.
Welcome to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Lior Gantz. He is the founder of the Wealth Research Group, which you can find out more about at wealthresearchgroup.com. Welcome to the Money Answer Show, Lior.
Hey, Jordan. Thanks for having me.
Just give people a little bit of background about people who haven't heard of you before. You've run many businesses in many places. Just kind of give them a brief rundown of how you come to where you are today.
Sure. I think the pivotal moment in my life was around age 13 when my father's business went under. And I was basically forced to get into the workplace. I started by selling clothes at a clothing store, painting decks, babysitting, coaching basketball, delivering pizzas when I was 16 and I had the license. And I saved. That was a big, important part of my teenage life, saving. And I know many teenagers, you get money, you go spend it, right? You literally, teenagers don't save. And I had a bank account, I had everything. And at age 16, the banker said, look, you've saved in 3 years, you've saved about $20,000. You should get a waiver and have your parents sign it, and you can trade stocks. And this was June 2000, so 3 months after the dot-com bubble burst. Obviously, I knew that in retrospect, but it turned out to be a great time to get involved in investing, etc. And that's when I started, age 16. That was 19 years ago. And that started me on a path of learning. So I really started reading because I was 16, I was in high school. All I knew was, hey, you pick up a book, you read. So instinctively, I wanted to invest in businesses, invest in real estate, etc. I started reading, and I devoured like 100 books in the first year. And like by age 18, I really ran through hundreds and hundreds of books. And I think that's what prompted me to go into business and to go into investing full time. And about 3 years ago, I said, look, this does not get any better with regards to financial education in school systems and everywhere else. It's just an epidemic, and shows like yours are the solution. And I said, look, I'm going to do my part. I launched wealthresearchgroup.com. It's a free financial newsletter. Was ranked #1 in the world in 2017, 2018 for many of our stock recommendations and whatnot, but we also do a lot of macro stuff, and that's where that's kind of a recap of how it all happened for myself.
Very good. Oh, let's kind of start with a broad view of the economy. Now, we've just had this trade deal announced between the U.S. and China. Just give us your evaluation of that trade deal. Is it real? Is it going to be significant? What is your take on that trade deal?
Well, first of all, it's called a phase one. There were a few topics that were covered in that. Agriculture, that was like the big win for Trump, because that talks to his real voters, like the hardland, those people that really, if you protect them, then you have this image of protecting the America and the real America. So what he did was he had inside of the deal a record-breaking amount of agriculture supply, and all that kind of stuff. So that's one thing. That's really political. In terms of money, we're only talking about $30 or $40 billion. Nothing significant, but it's a political win. The meat and bones are the IP stuff was covered in there partly, which is the big deal with China, stealing intellectual property. The second thing that was big was financial services, so how American banks and banks in general can enter China and vice versa. So that's a big part of that deal. But the major win about it is that it opens the gates for the rest of it, and that's what I think is going to be more significant. How they deal with other things that China's way of thinking basically imposes on the West. And if that will be done, it will be a very monumental deal in general. What would it do for your life or my life? If we look individually, not much. We're not talking about something that is life-altering for the average person. But as a global economy, talking about GDP, trade is, you can go back to the Bible, of course, and trade is as important as it gets. Trade between countries grows wealth. It grows progress. Everything we have is through trade. But it is critical that if China, now the second largest country in the world in terms of its economy, 15% of global GDP, and rising towards 2027, it will be at par with the U.S. for the size of its GDP. So it's going to be the largest economy on the planet in less than a decade. What America and the West are making sure that if that's the case, there are standards that are imposed which do not apply to emerging markets. In emerging markets, a lot of countries are able to do things that in the West are definitely a no-no. But if China wants to be westernized and be considered a top country, it has to meet those standards. That's what this deal is really about, how to bring China into the 21st century, Jordan.
So you think it's going to work and it's going to be enforceable and there'll be a positive relationship between the U.S. and China? It's been negative. We've been imposing tariffs on each other and had retaliation. Do you think this is going to turn the tide?
Well, I think it goes much deeper than that, and the trade deal will not change cultures. That's not what the deal is about. The deal is, you can think about it as a pact between two polar opposites. And the pact is to create some checks and balances between them. I created a report especially for your listeners about these topics. If you go to wealthresearchgroup.com/epic, you will. It's a report that I wrote about the epic duel between these two countries. It's a duel. It's a duel in terms of philosophy. It's a duel in terms of culture, in terms of economies. It's a showdown between two very different empires. If you do not know about the history of China, that country has been an empire for thousands of years, except for when it got so rich and powerful that it created this wall, the China Wall, and segregated itself from the world. But stuff that was invented in Europe during the industrial age, it was already invented in China hundreds of years prior to that. They were really advanced, and then they made a colossal mistake of closing themselves out and trying to protect that wealth. So, if you go to wealthresearchgroup.com/epic and wealthresearchgroup.com/mega, Make America Great Again, you'll see two things that Trump is doing in terms of how to make sure that America knows it's not going to be the number one economy in terms of its size. And that's fine. It doesn't need to be number one in terms of its size, as long as it's growing and as long as China doesn't threaten the growth. And that's the big issue of the day. How can there be a pact between two very different nations and still it will be very good for the entire world? The tariffs are not good for the world for so many reasons. They're a negotiation tactic.
Yeah. What are some of the investment options that come out of this? Particularly, are there some things you'd want to invest in China through the big companies, Tencent and Alibaba and Baidu and so on? So what are some of the specific investments coming out of the deal, assuming it goes ahead well?
Well, I think Tencent and Alibaba are companies that they've had so much growth already. This is 2, 3, 4 years ago. I think Tencent is still a company that is worth looking into. Many companies have suffered due to the trade war and will likely get a really great bounce. I'm not talking about companies that you want to invest in for decades. Some of them could be, but there are many that have suffered so much that any trade agreement would bounce the stock by 30, 40, 50%, etc. So we're not talking about a 10-year down the road, but a few months to a year, etc. These sort of shorter term
so
trades
give us some names.
Could be real.
What are some specific companies you think might bounce in the next year?
Okay, well, one company that I really like is called Expeditors of Washington. The ticker is EXPD. I really like that company. I actually invested in it a few years ago. It's already doubled from the price that I paid, around 34 a share. It's now 75. But the thing is, it's a stellar company, really the best of its kind. So, in my opinion, what it does is freight forwarding, and that plays into the trade. So many investors have shun away from it because there are so many trade problems. But essentially, all the big companies in the world that deal with China and in Asia use Expeditors of Washington for freight forwarding. That is a really, really difficult business if you try to, as a company, if you try to do all of that paperwork yourself, it's going to drive you nuts. And not only that, but Expeditors is a special company, and they help big firms reduce the cost, reduce delays, reduce the paperwork, everything. And they're not that big. It's an $8 billion operation. The stock prices outperformed the S&P 500 since inception in a major way. So I think the company is set for a beautiful future, and that's one company that I'd look at.
Right. Let's leave it at that. We're going to a break. We'll come back after this break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Lior Gantz. He's the founder of the Wealth Research Group. You can find out more at his website, wealthresearchgroup.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Lior Gantz. He's the founder of the Wealth Research Group at wealthresearchgroup.com. Welcome back to the show, Lior.
Hey, thanks.
So we talked about China and the U.S. A big move lately has been the precious metals, gold and silver. Why do you think they've done so well, and what is the future like? And do you think you should play it with physical metals or the mining stocks? What's the best way to play a move in gold and silver?
So September 2018, I bought my last batch of gold eagles. I bought 50 gold eagles, and it was a week before gold bottom. Gold bottom at $1,180, and I bought them for $1,200. So it's been a nice run, about 25% up. But Jordan, here's the incredible thing: gold bottom in September, then silver in November of 2018. Then you had the brutal December. The metals did not inversely correlate to the bear market, so it didn't shoot up in December. They actually started shooting up in January when it was apparent that the Fed will stop hiking. They paused, and then they really took off in anticipation of a rate cut, which historically the first rate cut after a pause is what prompts this sort of a move. So if you're asking me what prompted this incredible move higher, and it is a big move that they've had, it is because of a pause and then a rate cut. So now that that's done with, that has played a lot into their prices. In general, what I do personally, and you can go to wealthresearchgroup.com/gold playbook for my entire strategy on precious metals, and download that. With precious metals, what I do is I take the net worth of what I have, and there's two various ways either take 5% of it and convert it into gold and silver in physical form and use that simply as a hedge for the rest of your portfolio, and just in general, it's in general, it is an alternative to cash. That's one way. The second way that I've done it in the past few years is that I've taken my monthly burn rate in terms of cash, the family unit. Let's say it's $5,000 a month, for example. You multiply that by 24, so 2 years. And you take 2 years worth of your lifestyle burn rate and you convert that into physical precious metal. So in this example, you do 24 times $5,000, it's $120,000, and you converted 80% to gold, 20% to silver, and that's it. You store it. But that, to that extent, that is an insurance, a hedge, nothing more. It is not a trade. So that's one way that I deal with precious metals. But
how about the mining stocks? Because those are more volatile than gold itself.
Yeah, definitely. So with that in mind, Wealth Research Group, the newsletter, what it does, what I do in my own life, I spend many hours speaking with CEOs of mining companies, meeting them, building relationships with key individuals in the mining space. And what it does is it helps to create positive leverage on the way up when these companies are able to create momentum, and it makes sure that we know when the times are not good. How do you know? Well, the most important thing with mining stocks is the people. So if you look at the mining space, Jordan, there are probably thousands of companies out there in the public markets, Canada mostly, but there are about 20 people that are worth investing in terms of making sure that you're not speculating. Many companies will succeed. The CEO would succeed in his first go around, but you can't. You can't bet on that. If you look for the serial winners, that's what we do. We look for companies and CEOs that have already done it, and this is a new project or a secondary project or a way to get in on a new deal, etc. So the people are first, projects are second, location, so jurisdiction is third, and then how's the company financed in terms of insider ownership. I want to know that the people involved have a ton of skin in the game. And then if you have those four, then what you look for is obviously 5, valuation. You look for companies that trade very, very cheaply. So either after a big move down, or just in general, if you look at their peer comparison, they're very cheap. And if you have those 5 components, then you really have a situation where if in the near term there are catalysts, for example, anticipation of drilling results, a big capitalization move that can help the company advance. If you have those 6, then there's a green light. We just featured a company.
Yeah, 2 examples that meet all 5 of those criteria.
Well, first of all, my 4 horses for the mining space have always been the same. So I have 4 companies that I always hold through thick and thin, and it's done incredibly well. In fact, Jordan, one of these companies is the best performing company in the stock market overall, mining or otherwise, better than Apple, Google, etc. since 1991, the best performing stock in the world. If you go to wealthresearchgroup.com/4W, so 4 winners, right? The number 4 and 4W. You can download those 4 companies. I'll give you one of them just so you can understand. The company's name is Royal Gold, and why I love it is because it does no mining at all. It is a royalty company, and I just absolutely love that business model. If you understand, and I know you do, about the advantages of royalties in the mining space, they're superior.
The miners, and they get royalties as gold comes up. They don't have to do any mining themselves. And
exactly, and also for a fixed price. So it doesn't matter if the price goes up; they still buy it at a cheap, low price preset, and they don't do any of the mining.
Right.
Sorry?
Okay, so that's gold. So let's talk briefly before the break about silver. What is the case for silver, and what would be a way to play that?
So With silver, again, it's inside of that wealthresearch.com/4W. The analysis, the company's name is called First Majestic, and it's the blue chip in terms of the mining, in terms of the silver miners. It's the purest miner in the world in terms of their components of silver. So in other words, silver is a byproduct of mining. Most companies do not have directly silver mines because it's so cheap. Silver, it doesn't make sense to own directly silver mines. You own it, you mine gold, and then there's some silver in it. You mine nickel, there's some silver in it. This company is the purest in terms of their silver components. So every time silver goes up, this company goes up multiples times of it. And the company founder and CEO is a guy named Keith Neumeyer, and he's already had $2 billion companies under his belt. So talking about serial winners, this is as good as it comes.
What is the case for silver particularly? I understand that for gold with lower interest rates and deflation, but what is the case specifically for silver? Because it's more of an industrial metal.
It is. For all intents and purposes, institutions, governments, banks do not consider it to be money anymore, at least not in the past 30, 40 years. For the average person, though, especially in countries that are outside of the U.S., so Asia, India, China, it is still considered money because it's such a tight and small market. Whenever there's real demand, not industrial demand, but investment demand, the price can really skyrocket. You've seen this in 2011. You saw it in the 1980s, and basically in the late 70s. And if that sort of scenario happens again, then there's real money to be made. In fact, I'll tell you that about the same time that I bought those gold eagles, I used the options market, and in the options market, you can make hundreds of % in terms of weeks on call options, and that was an incredible trade that I've done. You make hundreds of % in terms of a week or two, Jordan. So that sort of a situation is unique to silver. It is like gold on steroids. So when that happens,
lower price, and therefore it has more leverage to it, is what you're saying.
Yes, and because it's poor man's gold, it creates a situation where if there's an investment demand for precious metals, most people flock to silver because it's so much more affordable. You can actually buy around 80 ounces of silver for 1 ounce of gold. So it makes so much sense if you are buying precious metals as a monetary hedge to go with silver instead of gold. If you're buying jewelry, if you're buying something that is industrial, then there's a world of difference. Silver has thousands of industrial uses, while gold has probably a few. Gold, but if you're using it as a monetary hedge, silver makes much more sense. And that's why you see every time that there's a catalyst in place, you see silver rallying much more in comparison to gold.
Yes, very good. Okay, we're going to take another break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Lior Gantz. He's the founder of Wealth Research Group. You can find out more at his website, wealthresearchgroup.com. He's also given you some special reports, one /epic, another one /4W for his 4 winners, and we'll be having more after the break as well. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Lior Gantz. He's the founder of the Wealth Research Group. You can find out more at his website, wealthresearchgroup.com. Welcome back to the show, Lior.
Hey, thanks.
So we've talked about China, we've talked about gold, we've talked about silver. Now Bitcoin is another area that has been of great interest. It had a big rise, a big fall. It's had somewhat of a rise this year. What is your view on the outlook for Bitcoin in particular and the cryptocurrencies, and what's the best way to play them if you want to play the cryptos?
Well, I'll tell you, when Bitcoin, I think I told you this on the last time I was on the show, when Bitcoin fell from 20,000 per coin to about 3,500, that was an average bear market. So an average bear market is between 80 and 90%. And therefore, unless you had a notion that this is not coming back anymore, in other words, that this is not a bear market, but it's the end, then you had a really good chance of getting in there and buying Bitcoin at the lows. And that's what we did around January. So we didn't know that it will rally about 300% and reach about 13,000 a coin by June. But we did know that after an 85% move down, then you really are in a chance where the bottom is near. So that's one thing.
What has driven it up this year?
So there are a number of hyped catalysts. So in other words, catalysts that are not fundamental, and there are a number of fundamental ones. The fundamental ones are problems that have been going on in regions like Venezuela, Turkey, Argentina, and other regions where Bitcoin is really helping people. And in other words, helping to function as money outside of the monetary system. And that is one thing that Bitcoin is really good at. And obviously, it's been the same in China. So that's one thing that has driven it fundamentally. Some of the things that have been hyped are the launch of Bucked. Bucked was launched last week. Very disappointing thus far, but the idea is it's a custodian service for institutions. So it's the first time that an institution, a hedge fund, etc., a pension fund can buy Bitcoin and have it stored in a way that is as legitimate as buying stocks.
And that's backed by the New York Stock Exchange, right? That
is owned by the Intercontinental Exchange. The ticker is ICE, right. And that is also the owner of the New York Stock Exchange. That is correct. So it is a big player. It has a disappointing start to it. So not a lot of demand so far in the first week or so. And that was one catalyst that was creating this sort of a hype. There's also halving. Halving is HALVING. So it's creating a situation where it's half the hash rate. And that's going to happen next year. And in anticipation of that, there's clear demand. Because once that happens, then you have a situation where there's less supply of Bitcoin. So people obviously getting Bitcoin in advance of that.
So how would you invest in it? Would you go through one of the exchanges? And how much would you put into it as a percentage of your portfolio, just roughly?
Well, right now it's much less interesting to me than it was when it was so clear at 3,500. So that is one thing that is important to note. The second thing is it's still more than 50% below its all-time high, so it is attractive to me in that regard. How I would buy Bitcoin? There are a number of ways to do it very simply. One is to open up an account with one of the exchanges. Use obviously one of the three major ones, and then go through the process of buying a cold storage wallet, which is similar to a discount key, and make sure that you have your password stored, etc. With that sort of a scenario, if you're comfortable with that, then I would do about 1 to 2% of your portfolio.
And what are the three exchanges that you like that are the biggest ones?
Well, it depends on the individual, but if you go to coinmarketcap.com, which is like the way that you can see all of this, all of the thousands, it's actually 2,969 different cryptocurrencies, and you click on Bitcoin, for example, if you want to buy Bitcoin, and then all you need to do is click on markets. Markets will get you to which exchange would be the best to buy with. Binance is a big one. I don't want to give out names without people doing some research on these, but obviously the big ones are known to everyone, and I think those are the best to use. Okay, so it's a speculative 1 to 2% of your portfolio, so we understand that. I want to switch to another area that you are big on, is what you call the dividend aristocrats. So maybe describe what dividend aristocrats are and why you like them as an asset class. So there are dividend achievers, dividend aristocrats, and dividend kings. Dividend achievers are companies that for the past 10 years have raised their dividends each and every year without fail. A dividend aristocrat is a company that has done that for 25 years, and a dividend king has done that for 50 years or more. The idea of a dividend that gets increased each and every year is an indicator of a competitive advantage that a company has. In other words, if a company is able to distribute back to the shareholders more and more cash, which with each passing year, no matter who's in the Oval Office, no matter what the interest rates are, and no matter what disruptive technologies are out there, it means that it's a special company in terms of its competitive advantage. Now, do companies cheat, quote unquote, on their dividends? In other words, borrow money in order to pay dividends, etc. It happens. But when you take a situation where there are companies that have done that for 25 years or more, then you eliminate some of these cheaters, quote unquote. So the reason I love the aristocrats are that they're proven enough. In other words, there have been 25 years or more, but they're not 50 years or more. In other words, they're not these types of companies that grow about 4 to 5% a year, and they're just not interesting over time. So these companies are small.
What would be some examples of dividend aristocrats, 1 or 2, that you would like, that you like their business, they've got a good long-term history of raising dividends?
Definitely. So let me tie that into what I talked about before, which is companies that have been losers because of the trade war. So one company that is a dividend aristocrat and is a great company to look at right now is called Archer's Daniel Midland. And the ticker for that, and obviously that is on my site, obviously. So if you go to the top menu of the Wealth Research Group site, you'll see one button that says dividends and another one that says stock market wealth. You can look at both of these, and those both point to companies that are dividend aristocrats and why they're interesting as investment vehicles. The one thing I really love about them is that they're fire and forget. In other words, if you do not look for day trading, if you look to buy a company and compound wealth over a period of 10 to 15 to 20 years and still beat the S&P 500, then these are the sort of companies that you look at. In other words, if you're really a part-time investor, you have 2 to 3 hours a week to read about investment opportunities, these are the companies that you would look at if you're not doing straightforward just S&P 500 stuff. So Archer Daniel Midland is a dominator in terms of foods, and because it's all about commodities and agriculture, it is very correlated to what's going on in global trade, and tariffs obviously have hurt it. So that's why I took a position about 3 weeks ago at $38 a share, and I think over time that company is more than destined to double in the next 2 to 3 years in terms of price. And the way I've seen it.
Archer Daniels Midland. Just one more dividend aristocrat before we go to the break.
So I'll give you a spin on the other side of the equation. There are companies that are usually priced for perfection because they're almost perfect companies. And most investors do not purchase them because they say, hey, the multiples here are so high, how can I make money, etc. But the interesting thing about them is that they always keep on compounding at these multiples, and so they actually beat the S&P 500 by a lot, but they're always expensive. But they're always going to be expensive if it makes sense. Many people have said, I'm not going to buy Apple here, I'm not going to buy Apple here, and years go by. Apple becomes a phenomenal investment opportunity, but people just do not go in because it's expensive. And I think some companies deserve that expensive label, and they can really make a fortune. If you look at a company called A.O. Smith, A.O. Smith, and it's a company that has a very simple business model. It creates AC units for houses and for big complexes. If you look at that company and look at that chart over time, it's amazing. It just suffered a 25% smackdown because of the trade wars, and it's the first time it's suffered that sort of a big slowdown in many years. I just took a position at around 47 a share. I think it's around 47 a share even as we're doing this interview, so it hasn't moved in the past 2-3 weeks, and that is a phenomenal company.
Terrific. We got two dividend aristocrats, Archer Daniels Midland and A.O. Smith. We're going to take another break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Lior Gantz. He's the founder of the Wealth Research Group, which you can find out more about at wealthresearchgroup.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Lior Gantz. He's the founder of the Wealth Research Group. You can find out more at wealthresearchgroup.com. Welcome back to the show, Lior.
Hey, thanks.
So you've been spending some time in Europe. We talked earlier about how China is growing. It's going to become the largest GDP in the world. What is your outlook for Europe?
So, yeah, I just spent, I think, June till September. So I was in France, I was in Italy, I was in Spain, I was in Switzerland. And one thing that is important to note about Europe is the culture. The European culture is very laid back, especially in the southern part of Europe. And in terms of their demographics, people now are marrying very late, and they like to have 1 or 2 kids at the most, because the way of life is so first world. People live a lot. People live, for example, in Greece or in Italy. They have one of the most longevity, right?
It's
Is the word in English?
Population. They've got a demographic problem. Not enough young people, you're saying.
Not only not enough young people, but not only do they not have enough young people, that the reprocreation is very slow. They have a very large group of retirees. And so the tax burden is incredible. But not only that, the culture is such that they now like to rely on tourism more than anything else. And that is obviously very cyclical and seasonal. Yeah. And they do not have the same mentality as as Europe had in the Industrial Revolution time. I think one of the things you're going to keep seeing from Europe is this sort of a mentality. There are pockets here and there. Switzerland is obviously an amazing pocket. Germany is very robust, but it faces a lot of issues. About one in every 8 Germans works either directly or indirectly for the car industry, and their car industry is very late to the electric vehicle. I wouldn't even say trend. It's the electric vehicle revolution, and so that's going to impact them.
And what do you think is going to happen with Brexit?
Who knows?
It's a major impact on Europe.
It is. a major impact, not just because of Britain, but because of the effect that it can create with other countries that would say, "Hey, I don't think this union is good for us either," and it will force other countries to go out of it as well. So I think that is the major key to it.
So would you be investing in Europe? I mean, with this culture and this demographic problem, are there investment opportunities in Europe or better ones elsewhere?
I actually do not like Europe that much in terms of the investment opportunities that are in there in terms of their stock markets. I do like real estate in Europe. In many countries, I've looked at real estate, and some I've invested mostly in rentals. Europe is a very rental-oriented continent. People there can rent for their entire lives. They do not subscribe to that American dream mentality where they must have a house.
Yeah.
And that has looked interesting in many different times. Europe is a continent that has a lot of recessions and a lot of slowdowns. So just be very selective and patient. And there are many opportunities. If you cannot buy outright, or you don't have the time to go to Europe, you don't have the time to really look at real estate, you can look at either REITs or companies that own land and own real estate, etc., especially on the London Stock Exchange. But I know many Americans are, that's going to be proven too difficult for them. So I think they can stick to many REITs that trade on the U.S. Stock Exchange and offer opportunities in niche markets that you can never buy properties yourself.
Why don't you give us an example of, say, two REITs that you would like?
So I think if you look at REITs that have a lot of success, they are mostly in areas that investors find it hard to invest in themselves. I'll give you an example. If you want to rent office space to the U.S. government, then it's very hard to become a real estate investor in that niche. But there's a specific company that actually does that, a REIT that actually does that. For example, it's called Gov. The ticker is Gov, like GOV for government. Yep. There are REITs in the retail space, and that's great because of this end of retail fed. The people think that there's not going to be any more retail malls, etc., which is obviously not true. The retail space, especially in Europe, Jordan, where I've been, it's rejuvenating. What companies are doing right now with their stores is they're trying to give you an experience. You're not just going to come in and shop. You're going to have a blast doing that, and that's what they're trying to compete with online.
In the retail area that you would like?
Well, you can look at Realty Income, for example. The ticker is O, just the letter O. And if you look at healthcare, there are great REITs as well because they own either nurseries or hospitals, etc. I like HCP, for example. The companies these three companies that I just gave to you, those are not companies that I like particularly now. They're not something that I would look at as an opportunity at this given point. All of them have just traded above their 52-week highs. So they just broke.
Long-term play.
But in general, if you track the companies and you do the research and you find the valuation that you like the company at, these are great companies to hold over time. I don't think a lot of investors know this, but since 1999, the best performing asset class in the world has been REITs with 9.9 a year.
Yeah,
better than
right.
Yes.
We're about to close. I just want to get a brief view on the U.S. election next year. Just for the moment, let's say it's President Trump against Elizabeth Warren, something like that. What do you think might happen, and what would be the impact on the markets either way?
So I think one thing that's amazing about what Trump has done, most presidents most candidates start their campaign trail and start to raise money about a year before the elections. Trump has done that since the day he came into office. He has a lot. He has 75 times the average of what the candidates have at this point in the campaign trail. So he is really cashed up, and he can do many things. And for a 70-plus-year-old man, he has strong genes. He goes everywhere, and I think his rallies are working. The media is really against him. In fact, I wrote an entire report about that. If you go to wealthresearchgroup.com/media, for an outsider, because I'm not an American, to watch American TV, it almost seems like it's a joke, because it looks so not real.
Yeah.
It's not reporting. It looks sort of disingenuous, even fake.
Let's take the other side. Let's say somebody like Elizabeth Warren gets elected. We have about 2 minutes to go. What do you think would happen to the markets?
The markets would not like that sort of a situation. They would be shocked and surprised if so much of the voters, 140 million voters, are going to vote around that number. If the ideas proposed by Elizabeth Warren are popular in America, it speaks volumes towards where America is going, and the markets will definitely not like that. The markets have really liked Trump until he put the tariffs on, and that's because of deregulation, tax cuts, etc. And I think when the trade deal will be finalized, that is sort of the big hovering cloud on the markets. When that's done, the markets will really rally. The cash levels right now around the...
What is your prediction of what's going to happen in the election a year from now, roughly?
I think he will win. I think Trump will win, unless there's a major economic problem in the next 12 months, which I don't see personally. But if that happens, that's the only thing that will really put him in a situation where it's risky for him. Otherwise, I think that the jobs market is so good, and he has helped and delivered on promises. So when he starts doing the campaign trail, he's going to name all the things that he's done that he promised doing, and I think that will really help him.
Really. Well, thanks so much. My guest this hour has been Lior Gantz. He's the founder of the Wealth Research Group. You can find out more about him and his many ideas on all these different topics at wealthresearchgroup.com. Thanks so much for being a great guest on the Money Answer Show, Lior.
Thank you, Jordan.
Thanks again. We'll be back next week with another edition of the Money Answer Show. Goodbye for now.
Thank you for joining Jordan Goodman and the Money Answer Show. If you have a question for Jordan, please visit his website at www.moneyanswers.com. And be sure to tune in every Monday at 12 p.m. Pacific Standard Time right here on Voice America Business. See you next week.